Okay, here we go. Here's oil. So let's take a look at this morning's price action already in oil and how we want to trade this setup throughout 2013. If you look this morning, the big red line is a previous high a day. And the previous high a day, we know that if we get above the previous high a day, which we did here this morning for you early morning traders, typically a lot of you guys don't log in until around 7 o'clock, 7:45. But here is a retest long, breakout of the previous high day, retest long. This is a very bullish move in the market. If you break above the previous high day, you look for the first retest to go long. When it turns a green bar, right there's your first retest long. So that started the market out in the trend that it's in. And it's called going to an outside day. When you're below the previous high day and above the previous low day, that's an inside day. When you get outside the previous high day, which are these red dots on my A9 tick chart, it's a very bullish move for the market. So we were already in a bullish mode coming into my HVA breakout. Now HVA are these red dots over here on the 5-minute chart. In all 2013, if you really want to put yourself in a position to get 40 to 60 tick trades, it's an average of 5 to 1, 1.5. A lot of you use 15 tick stops on gold and 15 tick stops on oil. So it's a almost 5 to 1 reward to risk on these trades. And what we want to do is you want to wait until you actually exceed the symmetry dots. So here HVA was laying this morning for us. Let me just paint a nice picture for you. Making sure we got this technique down. Very powerful technique. There we go. And when you reach HVA, that's not enough on the 5-minute chart. The entry is not the 5-minute chart, guys and gals. The entry is actually the 89 tick. So the 5-minute is a setup. So right there is the HVA. So the 5-minute is a setup. Okay. This is the 5-minute. Red dots over here. Red dots right here. Red dots. Okay. That's a 5-minute setup. And then the breakout will be your 2-minute chart on the 89 tick. So when I'm looking at this thing, what I want to do is I want to have a 2/3 candle close above my symmetry dot. So there's HVA was lying right there. You can see we hit it this morning and got rejected. You want to see rejections at the HVA also to really get a nice explosion off of it. Right there's a rejection off of HVA, came down, it breakout, hit HVA, rejected, came down the previous high day, got rejected to the upside. But you want a 2/3 candle close. And this candle right here where my arrow's at, this is not a 2/3 candle close. That's called a straddle bar. You don't want it to straddle. You want at least a 2/3 or more candle close above. So your entry on oil this morning was the HVA breakout, was that bar where my green arrows are at. That's the exact entry bar to the exact bar. Okay, there's no subjectivity on that. There's no thinking about it. There's no, that's a definite breakout in the market. Because one thing you have to understand, and I want to make sure we get off to the right start this year in the trading room. When you are in between the market profile dots, these green and red dots over here on the 5-minute chart, the market is called a balanced market. And if the market is balanced, I'm not anticipating a vertical move. I'm anticipating resistance on red and support on green. But when you exceed the red dots over here on the 5-minute market profile, I'm looking for a vertical move. The market becomes what's called unbalanced. And how we want to participate in the market is we want to participate in unbalanced markets. Unbalanced markets create big opportunity to the upside. And that's what we want to do. So if you look at this move this morning, beautiful trade, 85 fill. A lot of you got 85, 84, depending. If you use the entry software, depending where you, the entry software got you around the same fill also, depending if you manually or you did the auto. But if you look, what we want to try to do is we want to try to get to this first target, which is here. That's your first overall target, is the symmetry dots. Your second overall target to bail 75% of the trade is going to be your second set of symmetry dots. And your third set of target is going to be either a roller, 5-minute roller, or the third set of symmetry dots. So your final target actually is 51. So on your long side setup, depending 84, 85, 86 on your fill, your ultimate target is 51. So you're looking at a 60-tick trade as your final potential. That your third set of symmetry is typically your ultimate target on a trade. But after your second set of red dots that pop up, you want to bail 75% of your position. So if you're done 4 contracts, 3 contracts should have been billed at 35, and that gave you almost a 50 tick trade, 45 tick trade. And then your third set of symmetry, you can just bail the entire position, look for the next setup if you would like. You know, you could always use the symmetry dots to trail if you want, but I call this T1, T2, T3, and that's the easiest way to do it. Okay, now if we go over to gold, Gerald, go over to gold. I'm sorry, stay on oil for 1 sec, Gerald. Stay on oil for 1 second. Once you break HVA, guys and gals, the natural progression of the market, natural progression is a retest of the HVA. So we had another shot at it right here. When you retest the HVA, there's the breakout of HVA. Here's the retest of HVA. That is a bullish move in the market, breakout, retest, and there you use the first green bar to get in, first green bar. Now I suggest what you do, some of you guys and gals are using smaller stops on HVA breakouts and also the auto entry software. You know, the easiest way to do it is use a hard 15 tick stop. So you had a $150 risk on a $600 trade. So $600 trade, $150 risk. You should be risking around $150 for a $400 to $600 trade. That's your reward to risk. That's how you're going to do very well in the room. You got to put yourself in a position on the good reward to risk trades. These are the easiest trades to see: HVA breakouts and LVA breakdowns. A lot of you guys and gals, you know, are doing some real big days. You know, we have some traders that have done $2,000, $3,000, $4,000, $5,000 days now because of this breakout. Now, the easiest way to think about it is this, though. You don't need higher than a 15 tick stop, okay? And your hard stop is 15. Your first target is the symmetry dots, first set of red symmetry, second target, and there's your third set. But here's your second retest. HVA will act as natural support. There's your first retest long. So nice $600 trade to start out the day, $150 risk from the get-go. Now if we go over to gold, Gerald, go over to gold. Gold had the same setup. Remember, these setups are exactly the same on gold as oil. And it's exact same setup. If we look at gold this morning, HVA was sitting right here. HVA was sitting at just below 16.85. And so we had the symmetry dots. We were in an inside day. We're beside the green and red dots. We're anticipating a breakout to the upside with trend. And so what we do is we look at what? We're not looking to short HVA. We're looking for a buy breakout. So if you look at the whole, this actually had a whole body candle close right there. 2/3 or more body candle. The wicks don't count. Right there's your entry technique on gold. And that was exactly at the HVA, high value area. Once again, like I want to teach you guys, here's your first set of symmetry dots to bail on gold. There's your second set of symmetry dots to bail 75%. And when you know it, the third set of symmetry dots calls a high for the reversal. So on gold, you can use the roller as your final target or the third set of symmetry dot. It's either going to be a 5-minute roller, guys and gals, or it's going to be the third set of symmetry dot to bail on the trade. So on your entry technique, was, if you got filled, was 85.40, 85.30, 85.40, 85.50, depending on your fill, okay? And we run all the way up for what? You got another 60-tick trade, right? So, you know, these trades, these breakouts are 40 to 60 ticks. Once again, you're risking $150 per one contract for the 15-tick stop, you know, for a possible $400 to $600 trade. If you continue to do that, that's how you're going to see these $400 to $600 trades per one contract with the $150 risk. Is at HVA and LVA on the breakouts. But just make sure you scale at the symmetry dots. There's a scale, there's a scale, there's a scale. And make sure we're all good to go. And we start scaling at the first set of symmetry, second set, and then the third set. So that way we'll all be on the same page.